All right. Yeah, so what we'll do, as I was mentioning, just for time's sake, for tonight, we're going to record this. You don't have any questions per se, but between me and Carlos, we're going to make sure you guys get your broker's account, your trading accounts, your MT4, all that stuff set up and ready to go.
Good. Okay.
Yeah, so I know we did the moving averages, right? We put the moving averages on the chart last week.
You know what I need, man? I think, when we were talking about like the five wise men and all that, I felt
Yep.
like when you went down the list of pairs, I was writing them really fast, man. I just feel like I didn't really get like all the acronyms,
That's
the way
fine.
I should, but I was kind of just viewing random pairs or whatever.
Let's do that. So you have EUR is always first. Then you have GBP. I don't know if you want to write this or I'm gonna put it up there and then you can screenshot it. You can do that too, or I'll put this in the chat.
Okay.
So always have it.
Okay, good.
All right. So this is the order. Anytime you take a pair and you put it together with another one in any combination, right? Euro CAD, Euro CHF, whatever it is, the higher they are on this list, they're always first.
Okay.
So if it's if I want to put NZD and CAD together, NZD would be first, CAD would be second. It's supposed to go in the value of which currency is worth more, but that's not really true because the U.S. dollar is worth more than the Aussie and the New Zealand dollar. So
okay,
maybe at one point it was like that. I don't know.
Okay.
Yeah, what I'm gonna do here is
Post in the chat.
Yep. All right, so now that's in the chat, so you have that. Like I said, so basically you're just taking a combination of that. Now there are other pairs, like you have the ZAR, right? The African Rand, Mexican Peso, all of those things. But just to simplify it, whichever one of these ones here that on this list, they'll be first.
Okay.
So if it's like the Mexican Peso or something, it'll be the Japanese yen, Mexican Peso. Actually, is it? I don't even know about the Japanese yen. Hold on. MXN. I think the pound, the yen is always last. Yeah, the yen is always last. But as I was saying, so like if it's Euro, Mexican Peso, New Zealand, Mexican, the pound, whatever it is, an exotic, those are called exotics. These are called your, you can look it up like this, actually. The phone's going off. But these are your normal pairs. And then, or these first five are your normal pairs. Really, you can even take Aussie and New Zealand out of that too. And you'd move the yen up. And basically those, you call what's like the cross pairs, or where they don't have anything to do with the dollar.
Okay.
Those are cross pairs. Then you have like I said, exotics. All right, so that being said, real quick, so we went over the moving averages. Did you need help with that with the indicators?
Yeah. No, I mean, when I was looking through it, and like I said, I just picked random pairs. I was kind of just looking through it, trying to find some averages.
Yep.
Um, and for the most part, I took a look at, I was kind of understanding a range, right? So I guess we can review it real quick. So a range is picking like, how would you define a specific range? Because I was finding ranges, but I guess I was looking at, a wider view instead of looking a little bit more.
Yeah. So you were looking at the weekly on the
Yeah.
one chart, which is fine. It's actually a pretty good chart.
Because when I was looking at
on
like the
weekly.
15, I was having a little difficulty really understanding what I was looking at because it was a little closer, and I didn't see like an actual range from that point of view. So maybe you can help me with
Right.
that. Looking at the
So
15 and really understanding that range.
yeah. So exactly. So a pair could be. It look like it's trending on a lower time frame, but when you zoom out, you might see that, hey, wait a minute, this thing is really in a range.
Yeah.
What do I mean by that? That means imagine you bought a stock down here and you rode it all the way up here and then it came all the way back down here. How much money did you make?
hmm
Nothing, right? It's
Nothing,
a range. It canceled each other out.
hmm
Or even whatever, you bought it in here, The range is when the highs and the lows kind of take out each other as far as the value of them.
Gotcha.
So if I take my measuring tool and I look at it like this, they're pretty much equal in the amount of pips, right? So another way to look at it is the highs and the lows are equal. It's a pretty good way to say it. Or it has a midline and it swings away from that midline. But I'm pretty sure the real definition of a range, let's actually look and see.
Yeah, that's what I was like.
Yeah, see, when it trades between consistent high and low prices for a period of time. So my definition was kind of on point. So there, if you look at there, see the support and the resistance, it's stuck in this point. Another thing it's called is consolidation. And the idea here is you want to think of the terms of a spring as they're packing the spring and packing the spring and packing the spring, right? And it's becoming tighter and tighter and tighter before it launches in a certain direction.
So a range is just anything between the support and resistance. So anything.
Yeah. So basically, whether you're looking, actually, let me go back to that. So whether you're looking
the bottom is support.
Yep. Bottom is support, like your floor, and then resistance is up above, like your ceiling.
So anything within that. So basically, just anything within that, like within that range. So you have.
That's it.
Anything within that. So, and of course, your support and resistance change periodically throughout. Your resistance then becomes your support at some time, and then you get a new.
Right. So this is the way I show it. So imagine a skyscraper. All right, you got a building here. This is the stairwell. We'll call it the stairwell, right? So, or floor, whatever you want to say it. So this is the skyscraper in a sense. So what you have is you'll have where it'll bounce up and down. Like imagine I took a ball and I bet like right behind you in your picture there, right? You have a floor and then you have a ceiling. If I take a ball and I bounce that ball, it's bouncing from support to resistance, support, resistance, support, resistance. When it breaks the support or the resistance, it now is on a new floor.
Okay.
So in a sense, you can call it a new range, whatever you want to say,
Gotcha.
right? Because it is
Yeah.
a range of sorts, right? But as far as math or whatever you want to call it, it's basically the highs and lows. So again, it takes the elevator or the stairs, it's on a new floor and it's bouncing, bouncing, bouncing. And this is just the way the markets move.
Gotcha.
I can extend all this out and you can see that this is on this floor. But what it begins to do for you is it begins to tell you it's safe to play at this point rather than just hopping in the market, right? You want to find some kind of bearings of where the market is. So supports and resistances are key for that.
Okay. Makes
So another thing to think about with, I guess, a range, you got to understand another point to this is you see the price over here
Yeah.
and then the price down here. The easiest way to think of it is staying between that price.
The
Right?
range is between the high and the low.
Yeah.
Just
So
pretty much.
let's say, I don't know, it's a housing market or a pair of shoes or milk. Milk stays in a certain price, right? On a short term, yeah, sure, you might see a trend of a certain amount. Because I'm on the 15-minute, if I go down to the 5-minute, what looked like it was a range looks like here's a downtrend, and so on and so forth. But zooming out, you realize it's just in a bigger range. So there's nothing wrong with what the charts that you were showing. Just know, like on the weekly, yeah, man, there was a time back here where that was in a nice little wedge.
But you're saying realistically, I want to know also what's happening right now. So what's happening in that 15 and that 5-minute window.
History repeats itself. The thing here, the reason why this is not going to be of any value to you is because each one of these candles is a week.
Yeah.
And it takes a long time. Now imagine, imagine this was here. You were coming up to this point here, and you realize you were coming up to the top of what used to be of a weekly trend line. Like let's say here, like this, you were approaching this. Yeah, now it's like, all right, let me look at this weekly thing and see what's going on. I'm actually gonna leave that on there for now. But this is good. Matter of fact, one could even say, it's in a channel and it's got a long ways to drop. That's actually how I have mine marked up on here. Sorry, it's a little confusing. But it's just channels on channels and channels. If I can trap the price in a certain area into a range, whether it's a channel, whether there's a trend to it or not, it tells me I have more data to pick the direction of my trade. Here's another cool feature here with the moving averages is if the moving average is flat, that's a range. So in here, you see how the white is flat? And even the blue, the aqua in here, even the red, the yellow, there's no real direction to it. Well, heck, so are the candles. You know, it's flat, so it tells me it's in a range.
Okay.
So that's another thing. So, but when you have a direction to the moving average, slope, obviously the candles are moving with that slope.
Okay.
That's why what I was saying is if it can break a moving average with the candles, it's changing, it's fighting that direction. It's going against that direction that it's been doing. So as you can see here, for an example, is these moving averages are all pointing up. At a certain point when it broke that liquid, that 50, there begins to tell me there's a change there, right? Here it's using that 50, it's bouncing off of it, bouncing off of it. This becomes a kind of support. And when it breaks that support, that's telling me there's a direction change. And as we can see, it definitely changed direction.
Mm.
And that's how we make money.
It tested the support, I guess, and
Right.
for a reason, it's going in another direction.
Yep. In the same sense, people will buy. If this is bullish, most buyers or most traders are waiting for, they're sitting here waiting. Let's see if this thing touches the 50. Because that's where they're all waiting. When you get momentum, the more buyers, the more people in the market, the more money in the market, the more likely it's going to go a certain direction. So a lot of people were waiting here for this to come down and touch the 50. Skyrocket. Every single time it came in, it touched the 50. Skyrocket. Does that make sense?
It does. It does. So let's look at it, because this is one of the things I was thinking. So let's look at it like as far as like a day in the life of, right? So when you like, for example, like just let's start from a day in the life of trading. So when you say I get up at whatever time, what are the key points you look at? What is your, I guess your research and your gathering, all that before you actually get in? So what is a day in the life?
Top down analysis, right? So obviously I've been trading a while. I know what certain markets have been doing.
Okay.
So comes a time where sure, you're going to have to go and look from what happened left in order to know what happened right.
Okay.
But there is a sense that you may not necessarily once you understand ranging markets and those sorts of things, right? The moving averages, that's what I'm going to show you, is you don't need to know the whole story to know that what these moving averages do.
Okay.
Whatever the case, right? So top-down analysis, right? I understand money. I understand the flows of money and stuff. So when I come on here, let's say it's 6 a.m. Now we'll actually go through this. So based on what it did the day before, based on what it did the 3 days before, based on what day it is, based on what they did last week, I will begin to plan out my trading strategy for the week or for the day. Right? Okay. So I often like to make them, that's why I don't trade Mondays or Sundays, is because I want them to make their move and then I see, right? So they'll tend to make what they call a peak or an anchor.
It starts off like beginning of the week. It starts off like a regular week.
So this is Monday here.
Monday. Okay.
So for me, for 6 a.m.
So right? Really like 6 a.m. you're on. Like 6 a.m. you're
Yeah, depends. Depends. Sometimes they are making the moves before 6 or whatever, so I'll force myself to get up. But a lot of times they're not happening until 7:30, 8 o'clock, even 9 o'clock.
Okay.
So,
wow. Okay.
Right. But the highest volume of trading, the most volatile time, is where New York and London cross over. So that would be from 8 to 11. Carlos, what's up, bro?
8 a.m. to 11.
What's up, bro? Just
what's up, man?
Busy, but kind of helping on for a little.
Yep. Yeah. So Carlos, I may need you to take this over around 7:40-ish, just because I have another appointment. But this is being recorded, so this is gonna be good, and I'm hoping maybe you could go over and help him set up his Hugo's Way or whatever broker. I don't have.
Yeah, definitely. I mean, after 7, I'm gonna be definitely super free. So.
Perfect. Or I thought maybe we could do a recording of that. But anyhow, so all right. So here's 6 o'clock. I get up. I'm looking. I see what this is doing, right? But for me, I don't see a W. I don't see anything, right? So I'm waiting for some kind of story, right? Oh, I'm starting to check it. Okay, I see that, right. Oh, so they broke the range that it was in, right? It created a new low. So that tells me, right, I look for the fake out, right? I can trade the fake out, but sometimes I like to know that the fake out is over. Okay, there you go. Oh, all right, what are we on, the 15-minute? Whoa, all right, so it didn't even give us a W. So this was a V bottom. We probably wouldn't even have got in this. Maybe I would have. I would have gotten in according to the TDI down here. This was an extreme if I traded this pair. And yeah, I probably would have been in the trade here. We'd be up however many pips. So this is still Monday. But again, so I'm not looking to be very aggressive on a Monday because I want to know what the peak is or the anchor. Because you'll find that the next couple of days, they're going to trade away from that anchor that they just made. There's a saying that, so if I look and see here. So if I have, just imagine these are consecutive days, not Friday. The traders that are here, when I go to make a new low, I'm not going to take this low out because I have traders trapped there. I'm not going to go let them out. I'm going to keep creating higher lows as I'm making higher highs, right? To trade away from this point. Yeah, that is actually good. So here's another example. You got traders trapped up here. They come back, they don't let them out, right? Didn't take that high out.
Explain that what you're saying. Like, explain.
Okay, so imagine you got in for the buy up here.
Buy, right? Okay.
Right? And it drops down, and you're like, oh, it's coming back, it's coming back. Well, they come here, and they don't necessarily let those people who were in for the buy out, right? The people who, trying to catch a falling knife up here, people do it. You'd be surprised. It's like, oh, it's a breakout, So there were a lot of traders trapped at this price.
Got you. Waiting for it to,
to let them out or whatever, or to get out with a small loss.
Oh, I see. They took it up a little bit, but never up to the point.
So trader psychology, a person, this thing's coming up, like viciously coming up. They're like, oh yeah, finally it's going to get me out and I'm going to be a problem. As it comes violently, these people aren't going to take that L. They're going to be like, oh, that's reversing. No, it's not reversing. It's locking up more. They're getting their position better and better and better, right? They have a position here. They have a position here.
Okay.
Right?
Okay.
So as they keep spiking it back up, they're never taking out the highs. Right?
Oh, I see.
Below that, right?
Gotcha.
Below that. So all of these traders are still trapped. If you haven't taken the loss, so on and so forth. And then it comes a certain point when they finally, boom, and they break through. They have a lot of people up here. They have money up here, right? They probably wanted this market to go down, but they're the ones who bought. The market makers are the ones that bought to create that big spike that would make everybody think, ooh, it's breakout. So they're trapped up there too with their money, right? So we have equal highs up here, right? The midline of an old range. So that becomes a target. Oh, we took it out. Let's see. Did we take it all the way out? We didn't take it all the way out. But we cleared this one. Right? So they let themselves out at a break even for this money that they were in drawdown.
Okay.
They used a bunch of their money to make it go a certain way, and then they came back and let themselves out. So now based on what this,
so they get out by selling right back at break even, and they're out.
Right. So they were buyers here.
And then just sold it at the same point that they.
Exactly. Or at the highest peak. And you'll be surprised when they hit those stop losses, people that were selling, right? They knocked them out of the trade. They use that money, and then they also use the money of all of that together. Imagine like you're pushing down a spring, you're pushing it down, pushing it down. As soon as they let go of some of their positions, this thing is just going to bottom out. So it's just like loading a spring. So their money's up here. They're going to come back and get their money, so to speak, right? So now that's Monday, right? Now I see what they did on Monday. So for me, I'm now looking to trade this again in that same direction, right? Because we made a new level. We broke out from this range that was in here. So where do I want to get in at? Right? I am now looking for, as time goes on, I'm looking for this to come up, right? And then the candlesticks all right, well, I don't know what it's doing, but basically, all right, so we will use this instead. So I'm looking for something like this and continue. And I mean really continue, right? Because if breaking that level, I now know that I can trade this. The safest trade is that's in that same direction, away from this anchor that they created. Now there is a sense that this could be the peak here, and they'll trade away from that. But it's NFP week, then I start to find confirmations, right? It's non-farm payroll. So this is what you see what I'm saying here about the playoff of the 50?
Yeah, so you're looking to get in right here as at a what? So you're
buy.
getting it as a buy?
Yeah.
With the belief that it's going up?
Yeah.
And what's your evidence of that you feel like it's going to go up?
Objects in motion tend to stay in motion. Inertia, momentum. Let's see here. We had a breakout of this range.
Oh, and then okay.
Right?
Mm-hmm.
On this day, it broke out. Actually, we'll even say this day it broke out. What did it do? It came down to the 50. Whatever, it came to the 200.
Never went all the way down to I see what you're saying.
Right? Did it again. Now, the third day is not always promised. It's the same thing here. You had a break of this range in here, and then it dropped. They played off the 50, played off the 50, played off the 50, so on and so forth, right? I mean, I didn't make this stuff up. This is just what it does, you know?
So this in case would be using a W and M. This in case would be a W, right?
Yep.
So where would you see the W in this one?
Well, here you see an M. Trade it again. I mean, I can go and I can show you M's off of that 50. M, W, W. Now, sometimes you'll see them break deep below the 50. Well, that just means they're on the 30-minute. This dropping below like that is a perfect W off of the 30-minute 50. I almost guarantee it. Same here. So I do look at different time frames, right? I want to know what the 4 hour looks like. I want to know what the 30-minute, so on and so forth. But essentially what I'm showing you here, you don't necessarily need that. It is good to know, like I just said, is for me, is any bullish move like that. Now it depends. I mean, there's other things that I look at, like this particular pair. This could be what they call half a bat. Right? Half a Batman. But you'll see them make these shapes. And then it'll come down. So, but it doesn't matter. I'm looking for a play off of the aqua, right? So I want to see what it does off of that aqua. Like I don't have any bias in any way. I know that the safer trade is away from the peak, but we don't know what the peak is yet because it's Monday,
Okay.
right? So, like I said, we have multiple confirmations in order to, we don't, not just one, in order to hop in. So a lot can happen here. This market gapped. So let's see here. We live. Oh, all right. Huh. So yeah, this will continue. This will continue tomorrow. The moving average. And then you'll have on Wednesday, you'll have what's called a reversal. Oh, you know what? They might give us, I don't know. It depends on how bullish it is tomorrow. If it's super bullish, you know, then we might get a deep pullback, right? And that gives the buyers are waiting here because it gives them a low risk to reward. You know what I'm saying?
Yeah.
They know that things going up anyways, but you don't want to just hop in here. You want it to pull back
A little bit, right? And that's what I was thinking. Because
Pullback.
they're going to pull back a little bit to kind of somewhat meet that low, right?
Yeah,
Like,
if it pulls back, if I get a little tiny pullback like this,
that'll be a good time to.
I'm like, yeah, the risk to reward, I'll go find another pair. But if I comes even to this 50, now it's starting to catch my eye. But I'm not so confident how bullish this can be because it is NFP week. So there's that.
What's that term you use, bullish?
Bullish. Oh, I'm sorry if we didn't explain that. So bullish means up. So if you think of a bull, they ram up. And then the other one is bearish, because bears swipe down. I don't know who came up with it. It's been around for 100 years. So, yeah. So bullish is up, buy is up, long is up, short, or even call is up, put is down, bear. This terminology is crazy, but it is what it is. Yeah, so I'm looking for a deep pullback. Let's even look at the 30-minute. Oh yeah, look at that. Well, you can't make this stuff up, man. I'm not the only one looking at that. You know what I mean?
Mm-hmm.
Calculating the risk to reward. So this could pull back like this and still create that half a bat kind of shape, the Batman shape, the 22 as it's also called, and appease me.
So is that first step, like you would get up, and I guess you would do that. You would look at the previous day, the previous week,
right?
And then from that, you're now seeing, okay, is this bullish? Is it bearish? Where do I feel like to get in?
Right, and mind you, I'm always trading the same pairs.
Oh, okay.
So there's a story, like I know them, like.
And I see what you mean. Yeah.
Yeah, and that's key.
Is this one of the pairs that you
I do not. I do not, but this is the most popular pair. So I can use it for certain things. I can use it for a gold trade, or what is the economy doing. This makes up, the euro makes up 60% of what happens to the US dollar, and vice versa. Okay. So as far as if I'm trading anything that has to do with the US dollar, I kind of want to know what's happening with this. Okay. But here, let's go through real quick, if you can kind of remember some of the stuff from last week. And let's see what happened. So last week, I told you this is where I would have hopped in this trade. Actually, this is where I got in. I risked about 5 pips to gain all of that. So does this work? Sure. And I said, typically I will trade back to the midline. So when I asked in the chats, I think it was like here, right? This is all we could see. And I said, what are we looking for? We're now looking for some kind of M, some kind of break of the water, of the aqua, and then it hold down there, right? I want to see something that tells me this thing is going back to the midline.
Okay.
And in here today, I traded this up, and today I traded this down. And it still has another.
You got in. Where did you get in?
Where did I get in? I got in right.
Wow.
So, okay, so I got in from this extreme, the double tap on this, not so much the cross, but I did add another position here when the yellow crossed over the red.
Mm.
And then I rode this all the way down.
That was beautiful. And
Yep. It was good. It was good, but it's got quite a bit more to go back to that midline.
Mm-hmm.
I'm very confident in it, you know. And if I'm wrong. But in reality, it's higher probability. Why? Because I know that. How many times did they do it? A lot.
Yeah.
A lot. Was this a breakout? No. It just told us that in reality, the range is really up here.
Can you walk me through that? Walk me through that trade. So, like, walk me through.
Which one? This one up here?
Yeah. So you get in at a point of where? Where's what's the
So
the value?
I was looking for a double tap up here, right? The top of the range, the new top of the range, right? So if I go out on a 4 hour or something like that, it's an M. It's a big fat M, right? So, but then it also gave me an M on the 15-minute, but I traded off of this extreme. Right, it went from extreme to whatever, it's Friday, so no extreme.
Mm-hmm.
And then extreme. So I knew an extreme was coming, and I'm already waiting for W and everything. As soon as it tapped that, and I saw that it was in line with whatever, I was already in. Small position, right? Because I'm still not confident. But when it crossed here, yeah, I added another position.
And when you say you add another position, what exactly, like, how do you go about? I guess,
yeah, so he's going to help you set up your trading thing. So you have different position sizes, right?
Mm-hmm.
It's kind of like, how much am I going to bet? So to speak, right? How much am I willing to risk? So, and that's by lot size. But essentially, when I say add another position, is I have a position for the sell up here. When this crossed, I got into another position for the sell as well.
Gotcha. Okay.
So you can stack. You can have multiple positions for the sell or whatever direction you're going. You can have, if you want, you can have them going both ways. You know, I don't recommend it, but there are trading strategies like that. It's called hedging. Here's another thing. So that was that one. But the TDI is how I determine a lot of my trading as well. But I want to go over this one with you guys as well, because we went over this, and this was verbatim. So last time we had spoke, and it was in here, and I think Carlos was in a sell, right? And it broke. It broke these lows that we had seen before. And oh my gosh, I didn't even realize I already did this. I think I did it that day. This was the low, and it was breaking it. And I said, well, the reason why, because we were talking about it snapping back to the midline. I said, well, the reason why I wouldn't get in this just yet is because this could go lower because of this range here. This is suspect to me. And I said it could drop a little bit lower, spike, and take out all of these lows. And it did that while we were in the last meeting. And then from there, sorry. And then from there, I had said, I was like, I would place a buy somewhere in the middle of this old range. And it was like appending to the pip. I think it was like 4 pips drawdown. No, it was very, very small of drawdown where the trade went against me. I went negative a little bit before it took off. So I traded that up. And then I also said that, well, I also think the range could be down here at the bottom of this whole range. And then what would happen is if it breaks that, then it's telling us this is the real range. That was weird. I lost you. Lost you. All right, I'm back in action.
Again.
So, did that keep recording? Yes. All right, good. So now this is the bottom of the range, which it is below this old range. So this was a beautiful, beautiful trade. It played out exactly. It went back to the midline and so on and so forth. So I am expecting this to go back to the midline rather than come down here and take out these. Well, let's see what's happening in Aussie. Yeah, most likely it is more likely for them to take it back to that range. And then there's also this one. Same thing. It stayed in all of our ranges. So today we had a little break below, but it could be what's called a bear trap. So everybody's getting ready to sell this thing, sell this thing, sell this thing. Even I was in a sell on it after it broke. I was like, oh yeah, it's getting ready to drop forever. And then I took a step back and I was looking at it, I was like, wait a minute. There might be something more going on here. It's got room to drop.
Might drop back to that dotted line.
Yeah, that's where I was going to take it to actually. Or even, where is it? 1 hour there, right here, at least to here, which these are gaps in here and these big, big candles. There's a gap in the price. Where is it? Yeah, there's a gap in these big candles. So I at least trade it back there. Or even these ones here. This massive candle is a gap. So, but then I started looking at it and I was like, they're going to snap it back. This is a bear trap. All the bears are getting ready to sell this thing and most likely will shoot up. I do like how it's curving right now. For a second leg. 1 leg, 2 leg. But not confident in it. If it wasn't December, I would say yes. But I was doing that to show you that what we teach is valid.
Mm-hmm.
Like right there, if you just took those 3 trades, right, you would be up over 500 pips.
Yeah.
500 pips, if you had a 0.01, right, that's not necessarily risking a penny, but you're risking whatever, $5 or however much, right? And that would have been $50 for you, right? Or if you had a 0.1, that would have been $500. Or when you get to the point where that's a standard, yeah, that could have been $5,000 right there. just trading those things that I showed. The trick, what I try to do is I try to simplify the market. I want to trap that price in a range. There's a reason why they use ranges, is because they use those ranges to collect the contracts, but also to determine the math of where they can go and what they can do. So I'm doing the same exact thing in reverse. I'm looking at the math of where they can go and what they can do. Yeah, I actually called this today. And I did it by eyesight. I said that most likely GBP CHF made a new midline. And it did. Whereas opposed to, I don't think the same for GJ, even though they look very similar, because there's some other things that go into that.
Carlos, did he go out again?
Why did that freeze again? My connection is unstable. Let me close that. I don't know what's up.